Hey, hello, Remote Work Europe, Remote Work Spain people. It's great to have you with us. We've got lots of people registered for this webinar today. I'm always so thrilled when so many people want to hear about something as exciting as taxes, and looking forward to covering all of that and answering all your questions. Before we start, please say hi in the chat. Please let us know where you're listening from. I think it would be really great actually to get a sense whether people are already in Spain, whether they're planning to come here on a visa, maybe kind of whether you're already autonomo or whether you're an employee or whether you're seeking work. It would just be really interesting to hear from some of you what's going on. Oh, I've got a hello from Santander. That's great. Berlin. Okay. So people might be looking to move around from Europe. Antequera, Texas. All right. That's a nice early morning for you over there. Hi, Sol. It's nice to see some familiar faces popping in as well. Well, I'm not going to waste anybody's time today because I know we've got a lot to get through, and I'm simply going to hand you over and introduce, for anybody who doesn't know him, Louis Williams from Entre Tràmites. Now, Entre Tràmites are our partners in Remote Work Spain. They are also, I'm happy to say, my personal accountants, because I don't recommend services that I don't use personally. That's not how it works around here. So I wanted somebody I trusted to take care of my stuff, and I'm happy to recommend them to you. And whenever we get questions about tax, immigration as well, they do that too. I always refer to these guys because you don't want to guess with this stuff. You want to bring in the experts. So over to you, Louis.
Thank you very much. Thank you, Maya, for the brief introduction. It's great to be here from Entre Tràmites, the one place for everything boring that you do not want to do. Okay, so we're here for everything to help on Spain. But today's not about marketing. Today is about your journey and potentially the trade-off between whether it makes sense to be an employee or self-employed. Maybe you're currently, we heard in from some people out in Texas, some people out in Berlin at the moment. Maybe you currently have employment overseas and you're looking for what makes sense for you. What type of work, working structure makes sense? Should you be registered as an employee here in Spain or self-employed? Potentially even setting up your own company. We're here to run through a little bit of the most common questions. And then after that, we would love to open up to any questions which the audience might have. So I suppose we should kick off and start sharing the screen, no? Bingo. There we go. So what we're going to kick off on is what makes sense? Employee or self-employed? Next slide, please. Oh, actually, I can control it.
You can do that. Yeah.
Sorry about that. Very basic definition between self-employed or employee. Now, maybe in your country, it's super easy. You can choose whichever one of the two, or maybe one of the opportunities is not even possible. Maybe you're only allowed to be an employee. This is the case previously in Serbia and many other jurisdictions where actually the concept of self-employed did not exist. Maybe you're from the States where it's incredibly easy to be a 1099 contractor or to be an employee under W-2. In Spain, actually, when you are working for clients overseas, where you have an employer potentially overseas, in practice, there's a lot of flexibility of how you can set up. You can choose between self-employed or employee in many cases. Now, technically, if you're self-employed, you operate independently, you manage your own business or activity, you've got a commercial agreement with an entity overseas, you invoice your client overseas, and you're responsible for your own social security and taxes. Basically, you're a contractor, you invoice gross, and you receive gross, and then you need to pay your taxes. Theoretically, you have flexibility in organizing your time and resources and legally. However, I do want to touch on this between the practical case of self-employed contractors versus maybe what the legislative situation is. On the other side, you have an employee. Here, you basically receive a fixed salary, maybe bonuses, employment benefits, and you would have established under Spanish law a certain amount of vacation, potentially different unemployment benefits available, and the company is in charge of pretty much all of the admin. Now, within this, you've got restrictions on your freedom of operation, where you can work from and everything else, which is set by the employer. Now, in practice, under the self-employed setup, although legally your employer doesn't have an ability to compel you to where you work from and a few other constraints, in practice, many employers overseas say, look, if you want to move to Spain, all well and good, but I'm not employing you there. You have to be a contractor. Mm-hmm. This is what often is known as falso autónomo. But in practice, falso autónomo legislation, trying to stop people being contractors, pretty much is not applied if the employer is overseas. If the person who's contracting you is overseas, although legally you do have the same labor protections as an employee and everything else, cross-border enforcement is a nightmare. And more critically, cross-border contracting is actually a norm for how to operate cross-border in many circumstances. So self-employed allows you both to work on individual little projects or in practice operate almost like an employee, but critically, you are responsible for all your taxes and social security. So what's the obvious thing many people then say is like, hang on a second, how does that make sense for me? I have to pay more taxes. Of course, I want to be an employee. Let's discuss about exactly that point. So as an employee, yes, you've got your social security fee on your side, which is the Seguridad Social como empleado. In the UK, you can think of this as employee national insurance versus employer national insurance, and you have the obligation to pay income tax. Whereas if you're self-employed, you've got a self-employed social security fee, which replaces both the employee and the employer social security. You have the same income tax bands, basically. So under all the complexity, there is actually a very similar situation. Now, there's a little nuance, which I'll touch on in a second. You're responsible to charge VAT to your clients. Now, critically, VAT is a sales tax. And if your client is a business overseas, you do not need to charge them VAT in almost any circumstance. So if you are doing, let's say, copywriting services, it doesn't matter if you're a copywriting employee based in Spain, operating for the UK, US. If your client is a business, if your work is business work, you do not need to charge VAT because VAT is a tax on the consumption of consumer services. Now, as this is an export to a business outside of Spain, there is no issue. If your client is within Spain, then yes, you do need to charge VAT, but your employer or your contractor, the company who is hiring those services, can always reclaim the VAT. So in effect, they don't care. You have to file taxes quarterly and annually, whereas as an employee, you only have to do annual filings. Actually, on the self-employed, you also need to do social security filings every 2 months. But that's a relatively light touch procedure. So what makes sense? Social security as an employee. When you're employed in Spain, you gain access to unemployment benefits, coverage for work-related sickness or injury, any form of benefits and payments out in relation to this, critically maternity and paternity leave. You gain access to the public healthcare system. In practice, almost everybody does under either. If you're under Social Security, self-employed or employed, you'll see this is pretty much the same. And you get access to a pension, state pension, based on your level of earnings. So in Spain, they've got a system similar to the US, for instance, but different to the UK, where your level of pension is not just about how many years you've contributed, but also at what rate and how high your salary was. Now, a caveat on this. The Spanish pension system, like the German pension system, like the French pension system, like the Italian pension system, are all bankrupt. Now, we know the UK one is partially, we know the Dutch one is partially, however, the Danish one, those systems which give a flat pension benefit, which just is by contribution years and is a bit lower, is slightly more affordable. In Spain at the moment, 16% of government spending is public pensions. So if with the aging of the population, they expect that to be 32% of GDP. To give you a concept of what this means, if they do not cut pensions in Spain or do something to restrict them or have a massive boom in population growth, you would need to basically eliminate healthcare, education, foreign aid spending. Policing could probably maintain. You could probably maintain the police, a slimmed down army, and the roads. Every other public service would have to be eliminated to maintain the pension system as generous as it is. Why do I say this? Because one of the critical advantages on the employee side is that you contribute your social security based on your level of income. And therefore, if you are a higher earner, you have a higher right to a pension. But there is no money saved. The government could change this at any point. So the relative solvency of the Spanish state is important to understand within this. And the most likely thing which they would cut is the higher earners' pensions or the mid-earners' pensions, not the lowest earners. Because if you imagine you cut people who are getting 800 euros a month to only have 400, 300, you have real social issues which arise. Whereas if you cut them for somebody who has 3,000 to 1,500, it's more politically palatable. Now, how much does it cost? There's a 32% tax on the employer on up to the first 60,000 euros approximately. We are waiting till the release of the latest data for next year, and 6.5% on the employee. i.e., for a cost to an employer of 100 euros, before taking income tax, you will receive 70.83 euros of net income. That means before any income tax is applied, the employer pays 100 euros and you would receive 70 euros 83. So if you pay no income tax whatsoever because your income is low enough, you still effectively pay a 29% tax rate. Now, what about being self-employed? Self-employed is slightly different. And I've flagged in red the disadvantages, because coverage for work-related sickness or injury, benefits for work, non-work-related illness or injury, and public health care are basically the same. But as autonomos, you can choose what rate at which you pay. There is a minimum contribution level which you have to make, which is related to your income. But after that minimum, you have to have you can choose to make a higher level of contribution. A higher level of contribution would entitle you to a higher level of retirement, pension payment, higher level of maternity or paternity payments, or potentially higher level of unemployment benefits. Now, why have I flagged inactivity benefits harder to get? Even if you make it's an optional contribution as being self-employed, but a contribution to the inactivity, which when you're in the introductory year, you don't get it. That inactivity contribution does not grant you unemployment by default just because you stop working. You have to show that you have descended into losses, it continued, and therefore you needed to get unemployment benefit. Effectively, the barriers which they create on it means that it is potentially less attractive than it initially seems, the additional contribution on this. Nonetheless, you're exposed to a risk. So this is one of the big negatives of self-employment. If you get a contract cancelled and you don't think you can land new work very quickly, unemployment support is very limited, even if you contribute under the system. Maternity and paternity care is lower than the employer rates, and retirement and pension. I'm assuming for this case that you are choosing to pay the minimum. If you choose to pay a higher amount of Social Security, then your maternity and paternity care and your retirement and pension payments would be significantly higher. In the first year, Social Security is only 87 euros a month, or 1,100 euros. You might think, well, that's not that cheap. If you compare that for a second to paying 30% effectively as an employee in hidden Social Security that you don't realize you're paying, suddenly 1,000 euros a year doesn't seem too bad. Even the higher rate, which goes to 230 euros to 620 euros a month, depending on your earnings level, means that in general, as when you are self-employed, if you are on a middle or high income, self-employed always is better off financially net of Social Security and income tax. Now, I'm just going to show one table and then I'll see if there are any questions which have been being popped up. Feel free to write questions in any part in the channels where we are being published, and Maya will be reading them out. Anything else which would be relevant for the audience. We will have a question session near the end, but I can see this could be quite a natural point. So where does this get interesting? In general, income tax is basically the same in its application. Oh, that was interesting. They haven't lined up perfectly. So when I saved that as a PDF, it made a small adjustment. Interesting. Okay. So they are lined up perfectly within the different income levels, but unfortunately, they are not perfectly aligned vertically. So this was meant to show you 5,000 to 100,000 right at the bottom. Okay. But if you take your eyes down, what you will find is that income tax in these two tables ends up being very similar for a given level of gross salary. So the higher your income, net of Social Security employer, which is discounted. If you look for a moment on the line which says 40,000 euros of cost to employer income, for a 40,000 euro cost to employer income, that would be a 30,308 euro gross salary. So If you are negotiating with an employer and they are willing to pay you 40,000 euros as an employee, or hire you as self-employed, or hire you as an employee, but for the same cost to them. And if you think about an employer, what matters to them is how much you cost, not what you get net. You could negotiate a 40,000 contract at the same cost to your employer as a 30,300 euro salary. On a 30,300 euro salary, you would be left with 23,332 euros net. Whereas if you took 40,000 of a cost to employer, you'd be left with more like 27,483 if you're self-employed. So there is a good 4 grand of net income. And that excludes the fact as self-employed, you can also discount certain expenses and other costs, which you might not be able to deduct as an employee. I'm assuming no cost deduction in this. So if you look at the table, I've flagged in red at the top the only areas where it's worse being self-employed for the same cost to your employer. Basically, if your cost to the employer is less than 17,500 euros, it makes better sense for you to register to be an employee. But if your income is 20K or higher as self-employed, or 17.5K or higher as self-employed, on the base comparison, it is actually cheaper to be self-employed. Now, why is it more expensive in the initial stage? The reason is under Social Security, there is a minimum lower bound, like around 230 euros or 220. This lower bound is the least which they can charge you for in Social Security for being an autonomo. Now, whereas on the employer rate, it's always a percentage. With the self-employed, because there is this lowest amount, that can end up being high if you've got, let's say, a new idea which you've just started, which is why everyone says the Spanish system can feel particularly punitive at very early stages when you are just starting out trying a business idea. And you can see that on your first 5,000 euros, you pay about 50% taxation, 49.23% in the top right. So why might you choose employment? Let's say you're closer to retirement age and everything else, or stability is very important to have employment protections and things associated with that. There is a value there. If you are lower, younger, further away from retirement age without any potential Social Security benefit, you've got a middle to mid-high income, so 30K upwards. With self-employment, you can get a lot more money into your pocket net and create your own private savings to finance your potential retirement in the future, purchase of your property, having access to all the things you might enjoy within life. Whereas only for the lowest earners in Spain, below minimum wage, basically, does it make sense and to register as an employee rather than self-employed. Now, you may be in the situation where you can't even choose between the two of them. Your employer overseas says, look, I can only have you as a contractor. I do not want to deal with Spanish Social Security. And this is a reality. And you might hear people suggesting, for instance, employer of records. Now, these can work. If your employer is happy to cover all the costs, all the admin, fine, go for an employer of record. It's great. If they say to you, look, I can hire you as a contractor at 50 grand, or I can hire you through an employer of record. If the employer of records, but you have to cover the costs. If the employer of record charges 7-8K to actually do the employment and then the Social Security, and you have to bear those costs, you could be left with taking home 23,000 net, because you might get 40,000, you might end up getting a 30,000, 31,000 gross salary, and then your net income being 23, 24K. So the really important thing is, yes, self-employed might initially seem like a more expensive option because you see the taxes suddenly which your employer was paying. But actually, when you're negotiating, that should give you the ability to ask for more money. Ask for how much were you costing your employer. Never talk about what your salary was before. Always talk about your cost. Example, if you come from Italy, Italian taxes on payroll is 30%. So you ask for 30% more than what you're being paid. Then there's other benefits which might be included. In the UK, you have pension contributions and you have employer national insurance. Maybe it's 20% additionally, which they might offer you. Okay. When you're thinking of these negotiations with outside parties, always think, what is the total cost to my employer? Do not start to think, what is my gross salary? Because the other side is thinking, how much do you cost me? Okay. Now, do we have any questions in the form at the moment, Maya, which would be relevant, or should I continue? Is there a new regulation coming on the percentage sum you pay when you're self-employed? So the table I've got here is based on the regulation which they passed of the newly implemented rates until 2025, 2026. In order for them to make any further developments in this, more than just moving it up with inflation as of the minimum you need to pay, they need to have complete agreement and get this passed through Congress. There is an absolute division within Parliament at the moment in Spain. So first off, if you hear Yolanda Diaz saying anything on massive new taxes, regulation, or anything else, take it not just with a pinch of salt, take it with a bucket of salt, because basically she's trying to get visibility. She's trying to become visible because her party is doing very badly in the polls. Sumar. At the moment, they are talking about continuing in the progression and maybe making it closer to a percentage related sum for the self-employed. At the moment, they have not moved it. Why? Marginal taxes. Under the current system, actually, the interesting thing you'll find, and if you look at this table, after we get to about 10K onwards, you'll find the total tax rate you pay until you get 60 grand basically stays around 33%. It's between 27, 28 and 33%. So what they've got for the vast majority of people in Spain who are working is an effective rate of tax of around a third. So for every additional euro you make, you pay a third, which although seems somewhat high, it doesn't create a big cliff edge. Whereas if they started aligning social security like you do with the employment system and everything else, you would very quickly hit the point where you've got a 50% marginal rate of tax for people who are self-employed. And what that will likely drive is lots of black market behavior, lots of people deciding not to work at the margin. So there's a very active consideration in this. Employees, because they don't see what's going on at the back, don't necessarily notice when their marginal tax is so high, even though the employer knows it. For the self-employed, because it's so visible, there's a much larger working reaction effect which occurs. So at the moment, there is nothing set up, and they are stepping carefully because basically they don't want a situation where suddenly the self-employed suddenly cut their hours by 20%, saying it's just too much. Okay. So quick things on self-employed in Spain. Oh, I'll go on, continue with the question first. What category would I be in if I am the director of my own limited company in the UK, but I'm living in Spain? Am I employed by my company or do I have to register? There are two options in this. One, for the first 2 years, you can get posted under what's called an A1 certificate. Under an A1 certificate, you maintain your UK employment contract, and you can be posted and pay social security in the UK, but income tax in Spain. Now, if you've already moved to Spain or you've already been living here and working, or you've set up a UK limited while you're living in Spain, you need to register as self-employed. So what you do is you set up a self-employed contract. Now that's for two different reasons. A UK limited company or any overseas limited company, from a Spanish perspective, what they say with limited companies are if you own more than a third of a company and you have management roles, or if you own more than 25% of the company and you are the director of that company, you must pay social security as self-employed, even if you're employed by that company. So let's say you set up a sociedad limitada in Spain, you become what's called an autónomo societario. In practice, what does that mean? If you've got a UK limited overseas, you should set up as self-employed here. Now, if you own less than 25%, you've got other investors, everything else, then you kind of have some flexibility to choose if you want to be self-employed or get registered as employed. What is the reason why you might want to choose to register as employed? Autónomos, profesionales, self-employed, are not eligible to apply for Beckham's law for those who've recently moved, whereas employees are. So if you are a high-earning employee or have very significant assets overseas, it might be worthwhile either coming across on an A1 certificate where you pay social security in your home country, getting your company to register as an employer in Spain, or setting up a subsidiary to employ you in Spain so that you can get access to Beckham's Law. But this really, unless you have significant assets overseas because of the higher social security costs, is generally if you're making 80,000 euros or higher. Okay. So if you're in the top 1-2% in Spain.
Okay, that's really helpful. We do have a lot of questions coming through, which I'm not surprised about. Do you want to take them at the end, or we've got a couple of questions about Beckham's Law? So I don't know if it would be worth just briefly looking at that.
I'll rattle quickly because I've got a slide on Beckham's Law.
Okay.
I'll do this one quickly. If I'm European but have a UK contract, can I still work in Spain of access? Right, critically, you must not have already moved to Spain. Or if you're here as a tourist, you leave and then come back. This sounds a bit silly, but if you've never formally registered, you could always argue you are here as a tourist. You then go to the UK, fly back in, and you apply for what's called an A1 certificate. With the A1 certificate, you pay national insurance in the UK and then income tax in Spain. And under that, you can get Beckham's Law under the new reform, but you need what's called an A1 certificate from the UK. That A1 certificate will only work for the first 2 years and can be extended to up to 5, but that is unusual. The A1 certificate therefore can get you Beckham's Law, but then after 2 years, you might need to set up a subsidiary or an employer of record or something to maintain the UK contract. To be clear, when you say UK contract, I'm assuming UK employment contract. If it is a contract to contract, you cannot get Beckham's Law.
Often misunderstood. Thanks for covering that. I suggest we pen the rest of the questions in case you're going to cover the answers as you go through anyway. So
okay, so I'll quickly go. So most common mistakes when filing taxes as self-employed in Spain. Guys, please, always file. Even if you then have to correct your filing because you forgot something or something else, do not file late. Spain loves things punishing you for being 1 day late, failing to file something. It's much better to do the filing and then have to correct it than it is to not do the filing at all. Deductible expenses. Rule of thumb. You'll get used to this. I love rules of thumbs for when we run through parts. Misunderstanding deductible expenses. Most expenses that you think of that are deductible in Spain, almost all of them have to be directly related to your business activity. What does that mean? That they are pretty much exclusively used for your business. For instance, I want a company car. What do? I occasionally drive to visit clients, but actually it'll be my personal family car and everything else. You are going to get investigated and you're going to get a bunch of fines. Why? It's a personal car, which you've decided to buy with your business. If it's a business car, it has to be pretty much exclusive for the use. What can you do if it's a personal car, which you use then for business? You can get mileage the same way many others do. As a rule of thumb, if you were explaining this to someone in a bar who'd never been self-employed and they thought, wait, I've got that cost too. Why can't I deduct it? You probably can't deduct it. As a rule of thumb, if it's not related to the business or direct work, where is definitely deductible? Flying across to visit your client overseas, any cost of expenses associated with that. Laptops, they allow you to deduct up to 30% of your bills, electricity, gas, light, but not internet in general. Internet's a bit of a dubious one because internet doesn't vary based on, you don't pay a different rate based on demand. So they say that, well, there's no additional cost for you having internet at home. If you use deductible expenses from your home, you should not be using co-working or anything else because you're either using one as an office or not. Okay. So the other thing is the Spanish government can always ask for the paperwork and evidence. So please just scan your receipts and be ready to submit it. Submit on time. Don't be too aggressive on what you put through and keep your receipts. And on your receipts, they should have the name of your name, your NIA, your address, and the name, NIA, and address of where you've bought it from. A simple receipt often doesn't work. You need an invoice for most expenses. So income tax, Modelo 130, 130. This is a quarterly prepayment. If your clients are overseas, this will be 20% of what you've made during the quarter of profit that you pay. This prepayment does not affect how much you and what your total tax bill is likely to be. It's just a prepayment. So if your income ends up being lower, let's say 20,000 euros, you will have a tax reclaim. If your income ends up being higher, say 50,000 euros, you will pay more tax when you get to the end of the year because you are in a higher level of the tax, a higher tax rate. VAT. On this, if your clients are only outside, as I pointed out before, and businesses overseas, you do not need to charge them VAT. Actually, you get the wonderful thing, you get to reclaim VAT on your expenses. You buy a laptop for 1,210 euros, you pay 210 euros in VAT, 1,000 is the base, and you get to reclaim that 210 euros, okay? The tax on economic activities, IAE, is only relevant when you're getting above a million euros of revenue, really. You don't generally need to worry about this. There are quarterly filings and annual filings. Income tax, then at the end of the year, you need to file between April and June, and you need to file for all of your income, including any investment assets you might have overseas. If you have dividends and interest in an ISA in the UK, if you have a brokerage account in the States, all of this income you need to declare. Often you can deduct any taxes already paid in the other country from whatever you need to pay on that income, but you do need to declare it. It's not just your Spanish income. So let's say you have a rental property overseas, you do need to declare it. Roughly income tax brackets, first 12.5K, 19%, 12.5K to 20.2K, 24%, 20.2 to 35.2, 30%, 35.2 to 60, 37%, and then 45% onwards. Now, that varies by autonomous communities. This is the default state rate if you don't have any local variation, okay? In general, if you are self-employed, you can use a different rule of thumb, which is when you add Social Security and income tax together, it's basically first 55,000, you pay 35% tax. Not 35, 33% tax, 1 in 3 euros in taxes. After that, you pay 45% plus. This is probably not necessary to go into too much detail. This is about the reclaims on VAT and everything else, because we're more used to remote workers with clients overseas. This is the 0% rate on exports. That was what I was explaining when I was saying that you guys, many of you, if your clients are overseas, are not going to need to charge VAT. The really nice difference between 0% rated compared to exempt is, let's say you're a teacher. You can teach in Spain and not charge any VAT if you're a language teacher. But you can't reclaim VAT on your expenses. So when you've got a laptop for 1,210 euros, the 210 euros of VAT is an expense, but you cannot reclaim that money and get it back from the Spanish government. Whereas if you do consulting services, let's say copywriting services for a US blog site, you can invoice them and you can reclaim all that VAT. So you invoice without VAT, but you can reclaim it. VAT, for clarity, is known as IVA in Spain, IVA. Quarterly returns, April, July, October, January. Now, very briefly touching, limited companies are also an option. Now, unless you are a high earner looking for potentially options to get Beckham's Law, or you are or you're looking to employ people, SLs often are not the best option for many people due to the higher administrative costs. What are their structures? They can have one or more shareholders. So you can, if you go into business with somebody else, this is useful because then you own a business together. Whereas if you are, basically, if you go into business with somebody, an SL is a better idea than a comunidad de bienes, which is like a partnership. If you're going to hire people or you're going to take significant rental contracts like a cafe, shop, restaurant, an SL is useful. Why? Because it gives you limited liability. Do not think of the limited companies, big advantage being taxes. The big advantage of this is shielding your personal assets if things go wrong. That you cannot be pursued for your home if your business goes bankrupt. Okay? There is an advantage if your income exceeds 60,000 euros. I would advise booking a consultation with us to discuss it. If your income is above 60,000 euros, there are some tax benefits. Anything below that, the only reason is really, I'm looking to raise capital from outside. I'm going to have risk because I'm employing people, or I am looking to grow and reinvest and set up new entities and employ people soon. Okay? Why? One of the big mis-sellings which you find from accountants here in Spain is they will say, hey, you just pay corporation tax instead of income tax. And corporation tax is only 23% or 25% at the maximum rate. And it's 15% for the first 2 years. What they don't tell you is that when you then pull out the money, you have to pay dividend tax. And the dividend tax is 19 to 23% on the first 200 grand. When you combine these taxes together, it actually ends up being a 39 or 40% tax rate. So once you go above 60,000, there is a tax saving available with that. But before that, there isn't really. And the only area where there is an advantage for this as a tax saving is for, let's say you only pay the 23% and then you're reinvesting that in extra inventory, you're building out, you're opening up another restaurant, you're expanding your business, then it makes sense. There's no tax disadvantage with SLs, but there is a higher administrative cost. And it's in my interest. So if your income is below 60,000, really look at the self-employment rate. Now, if you want to hire somebody, it offers more protection, as mentioned. It can be required for some of your clients. The only other reason is sometimes they require a limited company and they say, I can't hire you as self-employed. I have to hire you with you having a company. Then you set up a company. But if your income is below 60K, do not look to do this for tax purposes. And accounting plans, for instance, with us would cost, including a pay slip and an SL, about 117 euros a month plus VAT, including annual accounts, corporation tax filing, and everything else. Whereas if you're a autonomo, we're talking 39 to 56 euros plus VAT in almost all cases. So it's there's a different cost basis. That's 600 euros a year, basically, of additional costs. So as you can see, it's my naked interest to sell you an SL, but it doesn't necessarily mean it makes sense for you. So I would advise you to, but if you're looking at hiring people or worried about liability because of big rental contracts, things like that, then it might make sense, but not for a tax reason, more for protecting your personal assets. Obligations are very similar to self-employed, except you have the corporate tax return and you've got annual accounts required. Those things are quite heavy, basically. Tax deductions, this is what we were going through on different expenses. Basically, everything which is directly related with your business, you can put rent and utilities up to a maximum of 30%. Now, rent can be a bit dubious, and that's like the higher risk deduction that can be challenged. But anything directly to do with your business, you can deduct, okay? With a limited company, basically the same. So, please, questions, and now we can open up to the whole broad range which was had. And I just realized I didn't have the Beckham's Law one, so we can open the Beckham's Law questions and I can address those.
Okay, right, we've got plenty of questions, don't worry, and we've got a little bit of time because you rattled through a hell of a lot of stuff. So let's start with some of the earlier questions. Oh, we did that one.
We did that one. That one's good.
We did that one. Right, let's move on to a teacher.
Brendan, can I invoice my clients in Spain as a teacher working from Ireland and tax resident in Ireland? I teach English to corporates. I am currently tax resident in Spain, but may have to return to Ireland next year. Right. If you live in Spain more than 183 days, you are, without doubt, Spanish tax resident. It's like if you're used to Irish social security self-employment, which is more attractive, or British self-employment, which is more attractive until maybe, let's see what happens on the 30th of October. Nobody knows what's happening, what's going to happen. There's a UK budget for all the non-Brits, which is being nicknamed the Halloween budget for all the nasty surprises which might be in it. You should be registered in Spain as self-employed. You're currently tax resident in Spain, may have to return. You actually need to be registered as self-employed in Spain to invoice across. If you do move to Ireland, you can continue to invoice the Spanish clients from Ireland, and you can do that, but you need to be living in Ireland. You can't just register yourself in Ireland while living and having your life here in Spain. There are some restrictions if those classes in Spain are in person, where they might force double registration and everything else. But from the sound of it, it looks like you're doing lots of stuff online, and it would be you doing your services from Ireland for your clients in Spain remotely. If that's the case, then yes, you can teach under an Irish registration. Basically, where
so you need to find an Irish accountant, I guess, when you go and settle back there.
And it's a once a year filing sort of thing in general in Ireland if you're below the VAT registration threshold. So my advice with this one is relatively simple. You can work where you and your laptop is where your base of work is and where you should be registered. If you're in Ireland, you can be in Ireland. It does not matter that your client is in Spain. Vice versa. It does not matter if your clients are overseas. If you live and work from your laptop here in Spain, like I am at this moment, I need to be taxed in Spain.
Makes sense. Okay, another quick one.
There's an interesting one on this one. Yes and no. It doesn't matter for Social Security on the introductory rate, but there is a tax advantage which is possible if you've got a start of economic activity, which says in your first year and potentially your second year being registered as an autonomo, if you were not doing that economic activity before, you can be taxed on only 80% of that income rather than all of it. Now, this descuento de inicio de la actividad, the discount for starting a new activity, is clearly commercially attractive. And so if you register in January, there's an advantage on that because you could potentially have 2 full years on that. However, let's say you haven't booked a bunch of income that you've made this year and you're going to be tax resident this year. If you do not register as autonomo and then have to declare that as self-employed but from another country while living in Spain, that could invalidate the inicio de la actividad for the next year. So in general, my advice would be, if you arrive October, November, December to live in Spain, wait till January, it's fine.
Okay,
but
great.
If you have got here earlier than that, register in the year when you've arrived. And particularly if you're here on the digital nomad visa, be aware if it's a requirement of registration and they are starting to cancel visas based on not being registered as self-employed. So people have gone for a year without registering, saying, yeah, no, I'll do it when it comes to it. I'm not sure I'm staying here or anything else. Doesn't matter. You staying here is not your choice anymore. You're in violation of your visa requirements. So if you're on digital nomad visa, get signed up, basically.
Excellent. Yes, that's very clear advice. Okay, a quick one here. I think maybe I better answer this, unless you want to take this one, Louis. Can you do a webinar on this for Italy? The answer from a Remote Work Europe perspective is we would love to. We don't currently have a host country leader for our Italy community. So please, this has come up anonymously from LinkedIn, but if you're interested in remote work in Italy, talk to me. Outside of this webinar, let's see what we can do, because I would love to do this for Italy, but it won't be with Libby, but we'll find the right provider who covers that market. Okay, here's an interesting one.
Oh, yes, that is an interesting one. The last one just on Italy, because it's quite fun. Italy has got an interesting tax regime with a discount for remote workers, but their social security system is more punitive for the self-employed. So their income tax discount is slightly less attractive than it seems, and they are restricting it slightly. But there is a nice thing for people who move, who might be higher earners. So if you're making 70, 80K plus, there is a nice tax break available there. Anyway, I'm not an Italian expert, just aware of one of the developments there. Manon, on your case, what about part-time employment, part-time autonomo? Where does this leave us? Spain have designed a system based on, it's a very rigid basis. Like the concept of employment and self-employment, the concept that somebody could have mini jobs or side work is not really built into the framework of the system. They see it as their role to protect, and one person's protection is another one's restriction, because by banning somebody to work more than 40 hours, are you making them free? Or is that the same as banning other aspects of their life that you cannot do, you cannot drink, you cannot smoke? Like, what restriction are we imposing on people? And this feeds into how they approach employment to part-time work. There is a discount called pluriactividad, where you register in Social Security as autonomo and register in employment. Now, in your first year, it always makes sense, if you're doing part-time autonomo and part-time employment, always do the tarifa plena. Don't do the discount for doing both social security systems together. Because the tarifa plena, the €87 rate, is cheaper than the discounted rate of combining the two. After this, there's a discount called pluriactividad, where I think you can get 25% off, or maybe a third off the social security you pay as an autonomo, because you're partially covered by your employment already in existence. However, if, let's say, you're making $7,000 from a part-time work as employed, or let's say you're making $12,000, And then you've got part-time autonomous work of 5 grand, 6 grand. Actually, you enter into a super punitive rate of tax here. In Spain, if you're on minimum wage and you just have employment income, you do not pay any income tax on that earnings, because they create a special tax break for employment earnings up to that point, which you will have seen in the table I put before. However, what they do is between 15K and like 23K, 24K is they pull this tax break back, which means you actually end up paying about a 60% income tax rate between 15K and 22K. And if you become an autónoma on those earnings, you can make a few grand and you can lose it even more quickly. It's one of the only cliff edges which exist. So if your part-time employment earnings are around 12 grand and your part-time autonomous earnings are around 6K, your autonomous earnings could be earning you almost nothing in addition. Or if you're making 15K in employment and 6K as an autonomous, it genuinely is, that's one of the points where you pay effectively 75, 80% taxation. It basically often doesn't make any sense at that little chunk of income. If you're not in that situation, then yes, you can work alongside both of them and everything else, but you do get slightly penalized by the dual social security. In general, we recommend, it's hard to recommend because there's labor security on the other side, is look, would your employer be willing to pay you more if you switch to being self-employed working for them? Or if you are a high earner on employment and autonomous, then you do both together side by side. You get more contribution years towards social security. But yes, this is a tricky position in Spain.
Yeah, that's a really difficult one.
Yeah. If you're
comes up a lot in the group. We don't know what to say. You know, somebody needs to reply to the comment at some point and say, will this definitely be invoiced and visible? Because you're not going to make that reply, and neither am I. But I think there's a lot of, obviously, informal earnings that does go on.
Yes, and this is one of my biggest frustrations and angers, for lack of a better description, with the Spanish system, is that basically to get started, it's hard, and to do stuff on the side, and they've created a cliff edge. So in order to protect those on low earnings from 15K, 16K, which is a very valid and good logical point, they've basically created it with a system financed by super penalized marginal tax rates from 15K to 22K for the employed. Yeah. And that is a big barrier which stops lots of people getting on advancing. Why do you think you end up getting rubbish service in some of the banks? Because honestly, there's no incentive and there's nothing really to care about.
Yeah, makes sense. We've got another sort of comment or question leading on from that, which is going to have the same kind of depressing answer, I suspect. So
this is a weird one. Yes and no. Technically, when you have zero income, if you want to be able to book your expenses and deduct your expenses and everything else, you can. But if you've got zero income, frankly, and you've got costs, I would not bother registering. I would book some of the costs and expenses as it is. I'll give an example. Let's say you needed to buy let's say you're starting a real estate agency and you needed to buy, for it, you needed to buy a new laptop and a few other things within this. Now, of course, if you buy that laptop, it's not an expense, you can't deduct it. But let's say that, okay, you start getting your first clients in 3, 4, 5 months later. You can't deduct the expense, but what you can do is say, hey, this is capital. This is my asset. And I will depreciate this over the next 3 years. That's one of the tricks which is done when you've got pre-existing costs, because any costs before you set up as autonomous are non-deductible. The only exception where I would say where it might make sense to register as an autonomous before you have any income coming in and everything else is if there is a reason for you for social security access, for family members or anything else, for getting fully into the system. That's the only other area where there might be a worthwhile reason. The other thing is, if you remain below minimum wage in Spain, let's say you make 14 grand a year, you can get the reduced tarifa plena for not just the first year, but the first 2 years. And if you're under 35 and female or under 30 and male, you can get it for a third year too.
Wow. Okay. I think we've had this one come up in the group before, where you need to make sure that you apply for that second year and register for it in good time. And
if your income then goes up above it, they will then claw it back.
Fair enough, I suppose. Yeah, that makes sense.
So that's one thing.
there's a lot of questions here, and I'm kind of conflating some of them and bundling them up together. Others we have covered, but we've got a few from the US, which I think it's well worth adjusting because we know we've got people listening from over there right now.
Once you're tax resident in Spain, you cannot deduct contributions made to pension funds outside of Spain. The reason being is there are deductible plans which the US doesn't necessarily recognize, which makes things a bit more of a pain. Where you can deduct contributions up to 5,750 euros in Spain. There is some recognition in Spain for other European pension fund providers, but until very recently, Spain didn't even really recognize private pensions. As I mentioned earlier in this, they had it, but it was so nominally pathetically small that, to give an idea, because people watching this might have no idea what you need to save. If you're from the US, you'll be more used to it, because, or if you're from Iceland or the UK or Denmark, it's a more common conversation. But for many others, we've got no idea what you actually need. If you want to have a pension of 20,000 euros a year from 65, you need to roughly save up 400 grand, give or take 500 grand. That's basically the amount you need in pre-tax savings to get 20,000 of pre-tax income. Now, the Spanish state promised a whole bunch of pensions and have been paying it out based on a very high rate, so that people never saw the need or the requirement to save the amount of money that they need for actual retirement. So because that system didn't exist, you can now imagine that, okay, if I can only put a maximum of 5,750 euros as an autonomo aside, and it used to be 1,500, there's no way you're ever going to build up a pension of more than 6,000 euros a year, maybe 10. So what they have created and limited on these contribution levels is way too low to actually have a pension which you could support yourself. So you often have to build up savings outside. And IRA contributions, although in the US you can make much higher contributions, these cannot be made while you live in Spain. They are non-tax deductible. You can potentially contribute to them, but then that income would be taxed and then taxed again when the money leaves the IRA. It's much better to put it into regular investment accounts and regular savings than it is, because outside pension funds are non-deductible for taxable income.
Right. And would you say put it into investment funds in Spain, or is this getting into the realm of personal advice?
No, I'll give the caveats. I cannot give personal financial advice, as there is a regulated thing on what investment assets you can put into. What I can inform in general is what is the tax treatment and what are fees like. The general disadvantage among lots of Spanish providers, particularly if you are American, just invest in the US. Basically, it removes filing requirements and you've got much better financial products than you can get here. The fees are lower and there's a wider range. And as a US national, you need to pay taxes over there. If you're non-US national, it might make sense within Spain. There are some investment accounts, but the big thing to watch out for in Spain is just how high some bank fees are. So you need to be very careful to look at the total expense ratio, which is all of the costs, not just what the fund charges you, but what the funds which are the sub-investments of that fund charge you. So you can build investment accounts in whatever country you want. Within this, you will always need to pay the taxes in Spain on the interest, dividends, and capital gains, but the investment assets do not need to be in Spain. And always, always, always look at the fees. Look at the fees.
Good advice here. And a related one about pensions, and I think we probably need to do a whole webinar about pensions, actually, Louis, at some point. But
I think that might be quite an interesting one to go on. Also, anybody who's on this, so we've got the free consultation link, but we also have the possibility to book in. I don't know have we got my calendar? My paid calendar is not on the link.
No, I don't think so. If people want to book directly with you,
what we can do is, Maya, how about I can send you a link, which I'll just see if I pull it out here.
I'm going to add it to the page that this webinar is going to be hosted on, and we can drop it into the comments.
Yes,
on all the different services.
Perfect. That sounds like a good idea. I'll pull it up and send it across in a second. Let me just confront this direct, because I think particularly for US pensions, some of the complexity around here, my team can cover everything to do with all the Spanish stuff, everything that you need to oblige. But when we get to cross-border international structuring, that would either have to be me or one of my international specialists on the team who are the paid consultations, just simply because of some of the complexity. Anyway, on to Danny. Danny, You plan to retire with Texas state pension and Social Security. From this, I'm assuming you worked in the US as a teacher or something else, and you've got a government pension scheme. You are one of the only lucky people on dual tax treaties. If you have a government pension for teaching or a government pension which is based to employment in the US as a federal government employee or a local state government employee, you do not need to declare that income in Spain. You pay the tax in the US, and you do not need to declare it in Spain. It is one of the only forms of income where that is not a requirement. And this is not for every country. This is the US and a couple of other treaties, okay? Social Security, you do need to pay a tax on this in Spain. You will do contract work with US universities. Your Social Security and your contract work will be calculated together for the self-employed tax rate. Not for Social Security payments in Spain, so not for the Social Security tax in Spain, but the Texas state pension that you've got related to employment will not be taxed in Spain and will not be used to calculate your self-employed tax rate.
Okay, that's good news. And another international one here from Brendan again. What's an approved retirement fund? I don't even know what that is.
If there are approved retirement funds, various different ones which are recognized, growth within the pension fund is not taxed. For instance, IRAs are not taxed on their growth and investment assets if it's a traditional IRA in the States, or if you've got a UK self-employed pension plan, or if you've got a Dutch, European, whatever standard pension plans. They usually grow tax-free within themselves, but whatever you draw from it is taxed the same as a salary. So any draws are taxed the same as a salary, base general, which is that progressive rate from 19 to 47%, depending on how high your income level is.
Okay, that's great, nice and clear. Question from Rita, will there be a recording? Yes, they will. You'll be able to watch this back on the same link that you're viewing it now. So don't worry about that. And here's one from Jay, which is a familiar situation.
Really interesting. I'm actually going to be with the Estonian government and actually Maya tomorrow, which is in Valencia, dropping in. Just as a caveat, I do need to disconnect at the end of the hour.
Right.
So, didn't quite expect so many questions to come in. As always, you can come in and ask, and we got the links to book in with my team, and also Maya will be sharing a link with the rest of you. So on an Estonian remote company, what happens to company tax residents if you work from Spain as an autonomo? This depends on employees and everything else that you may have, but in general, the rule is you need to, if you have no employees or anything else, you pretty much need to invoice the vast majority of the profits from the Estonian remote company. You can leave some profits within there for substance due to office and everything else, but there's a rule called economic substance, which determines how much substance is in the other country, determines how much can be left within Estonia and how much needs to be drawn to yourself. So you can build up a little bit, and you can particularly invest in IP and other expenses, and you can reinvest in software development, whatever you have within your entity. But you can't, for instance, just let's say you're an IT software engineer, you invoice 100 grand, you take 10 grand as your personal income and leave 90K in the Estonian entity. That is not possible under OECD substance rules. If you leave less than 25%, the Spanish authorities in general, in practice, don't care too much unless it's a very significant amount of money.
Right. Okay. We've got 1 minute left. I'm going to put one more question on the screen. All the rest of them, we're going to come back through the comments on the different threads and try and answer these as best we can.
Okay. I'm currently autonomous and my client is now moving to an EOR model. I'm currently invoicing them at 40,154 a year. I'm assuming 40,154, not 40,154,000, which would be an unbelievably fantastic salary. Millions, 40 million wouldn't be bad. A year flat fee. Okay. If you move to an EOR model, one key thing is you want it being their decision what they were doing if they want to move you to EOR and paying you. Now, they could be doing EORs and employing, or they could be using EORs and intermediary contractor. This is like a fake EOR. So a fake EOR is they contract into the consulting company and then contract you. So at no point do they actually employ you, but they charge a couple of €100 intermediary as a fee for pretty much nothing. If they are moving to an EOR model, my biggest advice is try and say, so if they start talking about moving you to salary, basically do not change in your negotiation your mention of your salary. And if they say, which one would you prefer? It'll have to be the same cost. in general, stay as autonomo, because your net income is way superior as an autonomo than compared to an EOR. It's actually almost perfectly the example which I had before in the table in the presentation.
Brilliant. Okay, 7 seconds. Where do people find out what they've paid?
So you can go and look at your tax return data at the end of the year. So there's a thing called Informe de Pagos, which basically you log in on the Declaración de la Renta form, and it can give you the tax ID. That usually you need to have what's called a digital certificate or clave to get it. Digital certificate is a piece which is installed on your computer.
We've got another whole webinar about the digital certificate, so you can go and find that on remoteworkeurope.eu under the Insights tab. I think it was earlier this year. Louis, I know you have to go. This has been so useful. Clearly, it's been incredibly helpful to lots of people. There's lots of grateful comments as well for you to review at leisure. I know that you have to go now, so I'll let you drop off. I will see you tomorrow in Valencia. And if anybody else is coming to Valencia Digital Summit, come and say hi to us both. We'll be hanging out with the Estonians, as we love to do. So thank you very much, everybody, for today. It's been brilliant. You'll be able to watch this back on the same link, and we'll try and get round to the comment threads as soon as we can. Enjoy the rest of your Tuesday. Bye, everyone.
Bye.